So here's the headline that's got everyone talking. Tata Motors is making its biggest acquisition ever. We're talking about a massive, high-stakes bet on the future of trucking. They're going all in to buy the European commercial vehicle giant Iveco. And the price tag? Get this. It's a staggering 3.7 billion euros. To put that in perspective for us here, that's nearly 38,000 crore rupees. A number so huge, it just immediately makes you ask one very important question. Why on earth would Tata, a company with a really profitable truck business, go out and buy a European rival that actually makes less money on every single truck it sells? I mean, on the surface, it seems completely backwards, right? So in this explainer, we're going to dig in and unpack the real logic behind this massive gamble. Okay, so the first piece of this puzzle is pretty straightforward. It's all about looking beyond India's borders. This is a classic diversification play. See, Tata Motors is the undisputed king of commercial vehicles in India. They command a massive 40% of the market. It's an absolute cash-generating machine. But, and this is a big but, its revenue is almost entirely tied to the Indian economy. And as we know, that can mean some pretty wild swings, those classic boom and bust cycles. And here is the real head-scratcher. This is the core of the puzzle. Tata's own commercial vehicle business is super profitable, with operating margins sitting at a healthy 12%. Iveco, the company they're buying, its margins are just 5.8%. So I ask again, why buy a less profitable business? This is where the story gets really, really fascinating. Because look what happens when you smash them together. The combined company instantly becomes a global commercial vehicle empire. All of a sudden, Europe is their biggest market at 50%, perfectly balancing out India at 35%. In just one move, Tata completely de-risks its business from the ups and downs of any single country's economy. But diversification alone, that doesn't explain a 3.7 billion euro price tag. And that brings us to the second and maybe the most critical reason. The belief that this is actually a billion-dollar bargain, a potential financial masterstroke. The key here, the real secret sauce, is the price they're paying compared to what the business actually earns. So Tata is buying Iveco for just 3 times its forecast earnings. Now, for comparison, Tata's own truck business is valued by experts at roughly 9 times its earnings. You see where this is going? You know, a Reuters analysis put it perfectly. They said, it's like buying a similar business at 1/3 the price. This simple line just cuts right to the heart of the financial logic. They believe they're buying these massive assets on the cheap. And when you zoom out and look at the whole global industry, the deal looks even better. You've got giants like Daimler and Volvo trading at 10, even 12 times their earnings. This just highlights the massive potential upside. If Tata can get in there, work their magic, improve Iveco's performance, and just nudge those margins up, the value of this whole thing could absolutely skyrocket. All right, so it's a bargain. We get that. But let's move on, because this is about way more than just a financial play. This isn't just about buying cheap. It's about buying a shortcut straight into the future. Think of this deal as a strategic time machine. Instantly, overnight, Tata gets a huge presence in Europe. They get their hands on advanced electric and hydrogen truck technology, they get a global R&D powerhouse, and even their own European financing arm. I mean, to build all of this from the ground up, it would have taken them decades and billions of dollars. And this acquisition, it also slots perfectly into Tata's bigger corporate strategy. See, the company is in the middle of splitting its commercial and passenger car businesses into 2 separate companies. By bulking up with Iveco right now, it makes that new standalone truck company a much bigger, much more global, and frankly, a far more attractive company for investors when it eventually lists on the stock market. Okay. That's the case for the deal. It sounds pretty good, right? But a deal this big is never a sure thing. So now, it's time for a reality check. We have to talk about the very real risks in this very high-stakes bet. Remember this number? That massive price tag? Well, it isn't being paid from spare cash lying around. Tata is taking on a huge new loan to fund this deal, right after they spent years working hard to become nearly debt-free. It's a major, major reversal of their strategy.
And honestly, the financial risk is just the beginning. The operational challenges here are huge. You're talking about a massive integration with an ex-Fiat business, with its own very unique culture. The truck market in Europe is actually cooling down. And let's be honest, Tata's track record with big foreign takeovers, it's a bit of a mixed bag. For every roaring success like Jaguar Land Rover, there's a painful story like Cora Steel. And on top of all that, they're paying a 30% premium, and the deal won't even be final for over a year.
So ultimately, it really boils down to this: possibility versus performance. Tata is paying a premium not for Iveco's current kind of weak performance, but for what it could become. They're paying for a gateway to future technology and true global reach.
So let's tie this all together. What is the final takeaway here? What is Tata really trying to do by completely rewriting its own rulebook? At the end of the day, this isn't about buying some steady, reliable cash cow. The margins are thin and the debt is very real. What Tata is actually buying here is a seat at the main table. A seat where the entire future of electric and hydrogen trucking is being decided, globally. You see, they were a powerhouse in India, but they were largely on the sidelines of that global conversation. This deal changes that, overnight.
Which leaves us with one final provocative question. Is Tata Motors masterfully building the future of global trucking by snapping up technology and scale at a bargain price? Or are they simply betting the house on a massively complex, incredibly risky deal that could set them back for years? In a world where every truck maker's racing to reinvent themselves, only time is going to tell if rewriting the rules was the right move.